All right, let's talk more on streaming. Paramount's streaming platform, Paramount Plus, reported losses widening to $575 million in its fiscal fourth quarter. Just one of the media giants feeling the pain as a slowdown in the advertising market and macroeconomic headwinds impacting the consumer, combined with high content costs to create what some might see as a perfect storm. Joining us now is Laura Martin, Needham Co, Senior Media and Internet Analyst. Always nice to see you, Laura. So let's talk about what we've learned the last couple of weeks from some of these earnings reports Shauna alluded to. And what do you think really will define this year in streaming? Is it going to be bundling? Is it going to be cost cutting? Where are we?
So I think content costs are going to come down. I think the competition is these losses are too high. Wall Street is not going to tolerate these losses in 2023. So you're going to see competition for content coming down for anything in the B and C category. And I think that Wall Street really wants profitability. So what that means is we've had Disney say in their earnings that they're going to start reallocating content back into the linear TV ecosystem because they want to elongate that revenue stream as long as possible. And I think you're going to see content costs getting under control because Wall Street is insisting that that happen.
Laura, what is your takeaway drilling down a little bit deeper into Disney? Certainly a number of changes that were announced from Iger on that most recent earnings call, cutting 7,000 jobs, targeting $5.5 billion in savings. Questions about where that leaves ESPN. What do you think?
So I really like the fact that they're breaking ESPN out as a separate category for the first time in 20 years. And I think the reason is because when they walk, what Iger's really good at is differentiating his voice, right? That's why he's going to get rid of all general entertainment and go back to those franchise properties of Marvel and Star Wars and princesses. That's smart because it's differentiated content and he can charge a price premium. Similarly, ESPN, if I'm walking in to bid against others, he's paying $1.5 billion right now for NBA rights. When I walk into the NBA, I think Disney can say, look, we'll pay you $2.5 billion, or we'll pay you $1 billion and we'll give you 2% of ESPN equity. So suddenly that bid looks really differentiated compared to somebody who gives them $2 billion in cash from Apple, for example. So if I was them, I would take the equity in ESPN, but breaking out ESPN separately allows him to do that. So he has said he's not looking to sell ESPN, but I wouldn't be surprised if he uses it in a clever bidding competitive advantage for some of these sports rights that come up over the next 3 years.
That is a theory I had not heard nor thought about, and a brilliant one. Okay, I want to switch over to Hulu, and they own about 2/3 of it. Prevailing wisdom was they'd buy out the remaining third from Comcast, but now it seems like the sentiment has shifted towards they might sell. Where are you on Disney's Hulu future?
So I do know that made news when Iger said he'd be willing to sell. And I think it's about price. At the end of the day, as you look at the Disney track record, including the 15 years under Iger, they don't sell anything. They just buy stuff. And even if it's a $70 billion Fox assets, they aren't sellers of assets. So I'd be shocked if, but I think what he's trying to put Comcast on notice is if Comcast wants to charge 4 times as much for their third of Hulu than he wants, Bob Iger's going to say, no, we're going to put it to you at that value. So I think he's trying to negotiate a more fair price for what Comcast is going to ask for his third. But based on his track record, I would guess they end up owning the last third of Hulu, not selling it to Comcast.
Laura, one of the parts in your note that really stuck out to me about Disney was just technology shifting authority away from the distributors, the producers, to the consumers. How then does the distributor, the consumer, get back some of that control?
So, that was Iger's assessment on the call, and I thought we pushed back. It's a really interesting insight. And so Bob Iger's pushing our thinking forward. I do think that these big FANG companies like Apple and Amazon really are locked down on consumer first. I'm not sure that's true of content. I think storytellers sort of do have a story they want to tell, and if they're successful, they bring the audience along. Like Avatar, for example, but like the consumer isn't asking for Avatar. Content is ahead of the consumer, and then the consumer has to adopt. So I'm not sure in the content storytelling business that the consumer is demanding these stories. I think brilliant storytellers tell them, and then the consumer adopts. So the way they get it back is they bundle. Disney's doing the best job of this, not only bundling. If you go to the parks, they give you a discount on Disney Plus. If you're a Disney Plus sub, they give you a discount on the parks. Smart. The data acquisition that Disney's got in 360 degrees for all their consumer touch points, they're using much more effectively. That's where the world's going, is using data on your super fans to charge a premium price and to get them to keep those consumer revenues in their ecosystem, not leak out to Paramount or leak out to Fox or leak out to Apple or Amazon.
Speaking of a premium price, word has it that Vince McMahon is looking for $9 billion for WWE. That's according to Bloomberg. Stopped popping today, about 2%, but up 30% on the news of a perceived sale. Any of the streaming giants you think could be in line, could afford that price tag, or any theories who else might step in other than the Saudis?
Sure. No, I think $9 billion is a lot to Vince McMahon and to shareholders. It's not a lot for Apple. It's not a lot for Amazon. It wouldn't be really a lot for Comcast. So the guys that have those rights today, Raw and SmackDown, are the Fox ecosystem, like the Fox enterprise and the Comcast enterprise. It's a little rich for Fox, I would say, because they're smaller. But certainly, hey, you want to play in the streaming wars? You better have deep pockets that can buy. Vince owns 100% of his content for wrestling forever. He bought it. That's the first thing he did when he took it over from his dad, is roll up all the library content for wrestling from the beginning of time. So to own that library of that special, like, niche audience, really valuable. I don't know if Vince will get 9. It's smart of him to ask for 9. But if it came in at 7 or 6, every streaming guy that's going to survive can afford that price point.
Laura, let's talk about one of the other dominant players in the streaming space. That is Google. YouTube CEO Susan Wojcicki stepping down from that chief executive position. YouTube without Susan, what does that look like? And what do you think that tells us just about the strategy of YouTube going forward?
Look, these numbers have been quite weak. Last quarter, YouTube ad revenue was down 8%. The quarter before, it was down 2%. It has been decelerating for 5 quarters. Wall Street is calling for the head of the CEO. So this is what happens. The CEO fires other people instead, or moves them out first to see if he can save his own job. So I wouldn't be surprised with these numbers Google's putting up if they replace everybody and the CEO tries to keep his job. It wouldn't surprise me if even the CEO cannot keep his job if they don't report a better quarter next quarter.
Wow, Laura, we're going to have you back on to talk a little bit more about that. Laura Martin, always great to have you. Thanks so much.